Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Smash that like button. Subscribe if you haven't. And just a little disclaimer. Nothing should be construed as financial investment advice. These are just my opinions, thoughts on the market. You can read more on the disclaimer below. And let's get into today's stuff. The stock market. I didn't do a video on Thursday, and the stock market is getting taken to the woodshed. I don't know, just getting its butt beat, getting smacked down like you wouldn't believe. So, if you're short, congratulations. If not, I don't know what to tell you. But yeah, let's look. We'll go into the economic data, but let's go into. Of course, they blame this. They talk about Trump tariffs. I think they're seeing the economy's bad. It's shaky, and Trump tariffs is unleashing the real sentiment that they feel. Hold on. One thing I forgot to do. I don't know why I did this, but we will be looking at these. But we will be looking at these. Oh my gosh. Sorry. Let me get back to sharing. And so Google, you look at the stock market, this was a really bad day. I don't really know how much. I'm not going to do those. Let's go to the S&P. The S&P is at 5,000 now. And yeah, it's getting bad. So one day, look at that, 5.97% down. On a 5 day, it's down 8%. 1 month, it's down 12%. 6 months, it's down 11%. And of course, year to date, it's down 13%. And look at it, all the yearly gains have been erased, 1.42%. It's still up on a 5 year, but if you look at it, it's really getting taken to the woodshed. As I talked about ad nauseum, this market, any little thing can destroy it because the foundation is so bad. The economy is horrendous. And I think it's a combination of just little cuts here with the Doge layoffs and the tariffs, I think, are scaring the crap out of people and I also just think more bankruptcies are just coming into reality. I just read somewhere, but the bankruptcy was last year, but what was supposed to be a Chapter 11, a big automaker did a full liquidation. I think it's Wheelbros. Let me see. Wheelbros liquidation. So yeah, it's Wheel Pros. So Wheel Pros owner, that was I just read that on the street today about how they emerged from a liquidation. But yeah, the stock market is not doing well. Look at gold. This is how you know things are not doing well. Looking at GLD today, it finally took down 2.34%. Really a big down day. We'll do Kitco since it's closed. That's the one good thing about Fridays is it has the closing price. I wish they would just do this during the week where they would have like a closing price and just not even do after hours. I guess I can see because I used to sell precious metals. Someone comes in and orders at 8 o'clock or 8 a.m. But look at that. Down $77 today. That is a big thing. And the miners, they were not, we'll just do GDX. They were actually up yesterday, but today, look at that, 8% in one day. The miners, and this is how you can tell, is that when they're losing on everything, they're going to take things that are doing well. Like, look at gold. It's still above that 3,000 mark. Look at that, 3,000. A lot of people are saying 2,600. I don't know where this correction is going to go. Hopefully, if I have the money, I'll be buying. So I've paid off a lot of loans and everything and just personal stuff. But I have I'll benefit regardless. And that's why I sold. I knew something like this was coming. And when it broke 3,000, went up there, had a big day, I sold, even if it's a little early, but I sold just to pay off loans. You know, you want to get out of debt right now because credit's going to about to dry up. And, you know, and I've covered on this channel, there's going to be the layoffs and how bad things are in America. So look at GDX, Huey. That's another gold bug index. That's down even worse, 9.4%. So yeah, SILJ, junior ETF, look at that, 10.5, 10.5%. So see, I can tell, like, if it goes to around 3,000, I think it'll be like 4 to 6 months just sideways. Goes to 2,800, that'll be a couple of months. I think if it goes to 2,600, that will be like a month or so. But yeah, if you look at this, these are the big things with let's look at the fear and greed index. This is why I think gold has a little more selling. You remember on my other channel, so you know this is why it's important to watch every day, because this is all cumulative. Talked about extreme greed. Now it's at, look at it right here. It's a little bit about greed. I think they're gonna come here and then they'll start getting a bounce. And that's what I can say. You know, went from extreme greed, now it's greed. Uh, it was up here, so you can tell it was up here at extreme, and now it's this is. I wish they had numbers. You see, it was at 89, the 88, 89, and now it's at 87. So it is coming down, but yeah, it's at. So gold is still at. So there can be more selling. And you can tell I said this was going to 3,000, so you can't call me a bear. And I don't think this is the top. I just think this could potentially be a top. I don't think it will be a multi-year top. I don't think we're near there. You don't see the euphoria in the miners. And remember my targets, $50 silver, about $500 Huey is $60 GDX. Those are when you got to really consider, in my opinion, either being really hedged or in my opinion, not financial invest. Like, I got to really lighten the load up here. So anyway, that's gold here. Um, let's look at the CNN fear and greed. This has to be astronaut. Look at this fear. This is why I think the market could bounce soon. 4,800, 4,700 goes down, then gets a bounce, because this is really a lot of fear in the markets. But I think QE is coming. There is QE coming. But let's do the data real quick. Look at this, the Challenger job cuts. 275, way above previous. As you can see, the layoffs, they're starting to get into the data. Balance of trade, 122, 123. So continuing jobless claims, 223. So, but you know, the S&P global composite, that was 53.5. That's solid. Global services PMI 54. But the ISM services 58 instead of 53. So you look at this isn't good. This is mixed to bad data. But the next day, non-farm payrolls, that was strong, 228. And I think the market, what they don't see is the average hourly earnings on a year over year. That has declined less than previous estimates. So that's not what you hear a lot of people. And the unemployment rate did climb up, even though it's at forecasted. But look at this. Government payrolls were positive, 19,000 added. So those Doge layoffs have not made their way, at least to the jobs numbers yet. And manufacturing, that's positive. Non-farm, so the private sector I don't know how, because it's all about, all you see is layoffs, and you can tell I've covered, but uh, this is sort of overall mixed data. And that's why and I think they know. But the other thing I want to get into was, if you look at this market tanking, I knew this was sort of coming, but this is sort of creeping into mainstream news. I already told you the end game is that the Trump tariffs are going to cause QE. And if it's not QE, it's ZIRP, zero interest rate policy, ZIRP. And so here, let's see, obviously, traders betting Fed will cut at least 4 times this year to bail out a cut. There you go. It used to be 2. Now they're talking about 4. Maybe they'll have to cut 4. Traders are now betting the Federal Reserve will cut interest rates at least 4 times. They listen to my channel. They know that this will be coming. So odds of 5 quarter point reductions coming this year jump to 37.9% from 18.3. So there it is. You can see the implied odds Federal Reserve will cut aggressively rose after Trump tariffs raised fears of a global trade war. I mean, if you just listen to my channel the whole time, you would have known this was going to happen. I even have one, will Trump tariffs trigger QE? Of course, towards the end, I say, yeah, I will. So right here, traders are now betting that. And then I saw this article. I don't know who it was, but Fed Chair Powell is coming to terms with the fact that he needs to cut rates now, not later. And the Fed is going to cry uncle. So Jerome Powell is finally facing the problem head on. After months of dodging the obvious, Federal Reserve Chairman is being forced to accept that it's time to cut interest rates, and fast. Fast. Remember. So here it is. Tariffs, sticky inflation, slow growth, rising recession risk. You name it, it's all bad there. It's like you're watching my channel. Trump is forcing the Fed into a corner. This is what I said. These will trigger ZIRP. Zero interest, stuck between an inflation and a recession. There it is. So let's go to the next ones. Just a couple of things I found interesting. JP Morgan, first Wall Street bank to forecast a recession. So they're making the tariffs as a scapegoat. But if you saw my channel, I've been talking about this ad nauseum for the last year and a half or 2 years, basically since 2022. U.S. economist sees a 2-quarter recession coming back half of 2025. I mean, if you look at this, so as you can see, JP Morgan, they're trying to reestablish credibility. But if you actually look at this, this is the Atlanta Fed GDP, and they now have latest estimate, April 3rd, GDP coming in at negative 2.8%. You don't even need the back half. They're just saying the back half to be safe, unless they're actually picking the date but if you look at it, it could just be the first 2 quarters that they're going to get recessions, because with the tariffs coming, prices rise, people spend less. So consumer spending tanks, and this economy is built on consumer spending. So the first 2 quarters, it could be. So look at the economy. It is absolutely tanking. And the funny thing is, like, these are people's 401ks. These are not funny. The sad thing is these are people's 401ks. And if I think if the stock market tanks, people they might be force majeure on their houses. They might have to sell their houses, or because they might say, well, my 401k is not doing well. My stock portfolio is not doing well. I could be losing my job. I have all this debt. How am I going to get rid of it? Well, I have lots of equity in my house. Now, some people take out a home equity loan, but some people, if they're in their 30s and 40s, they might just be like, well, I can sell my home and live with my parents. Uh, and that way we can save money, and they call it intergenerational living. So we got a couple of things going, but remember, this is playing out sort of how I said. If you go back to all mine, Trump's tariffs will trigger QE. So anyway, hit that like button, subscribe. Remember, not financial investment advice. And thank you for watching all the way through. I'll see you next video.